Shall we FS up? So let's look at the dollar index and to see what the index is all about. And so one of the first things you do anytime you come into chart is to see the performance of the United States dollar. The advantage of spying the United States dollar is gives you a clue and a clear directional bias that the entire market is built around US dollar, as United States dollar is number one trading currency in the world. It's trading against everything. It's trading against pounds, trading against yen, trading against euro, trading against British pound sterling. It's trading against other cryptocurrencies. So, you know, to know the direction of the market, especially if the market is heading towards support or the market is heading towards resistance, it's key and critical. It's key and critical to know. So let's look at it and see what we can make out of it. I think dollar is showing some resilience. United States dollar is showing resilience and on a path to climbing back above 100. And if dollar resilience shows above 100, that could restore hope and confidence among investors, and we could be seeing some capital inflow into United States economy. So, but structurally, instead of we trying to predict the market, I think it's important that we look at what the market have done and try to demystify what price has done in the past. So we'll be looking at 30-year bond yield, 10-year bond yield, 2-year bond yield, and this will give us a clue as to the state of the U.S. economy. Then we'll look at Nasdaq and S&P to see the state of the economy. We'll also look at US 30 shortly after now. As the week draws to an end, we'd like to have a clue and start preparing ahead of next week. Next week is going to be an explosive week, and interest rate decision is around the corner, and there are fundamental data coming in as Federal Reserve has vowed to make interest rate decisions based on data-to-data approach instead of being on speculative. So all central banks are relying on interest rate decision based on fundamental data as they unfold. So it's not just only Federal Reserve, but why US of importance to us is because the United States dollar controls the entire market. So it is important to chart US dollar and just to have it without any stress as the direction of the market. And it feels good to see this is the structure the market have created. And there's a weekly time frame. The weekly time frame structure. And when price returned into the structure, it found double confluence. And on that double confluence, we have seen that the dollar index is beginning to retrace. And one of the advantage of having price at double confluence is that it's where a descending trend line meets an ascending trend line gives a higher probability for price. And we have seen that the index is making a wave, and one more return will be a push up. Or if we continue to have geopolitical tension as a result of tariff war, then we could see the dollar begin to come down. In fact, whatever that breaks price below this descending trend line will ultimately bring the United States dollar to a place of very, very uncertain market behavior. And I'm anticipating this. If they fall out from that structure, the dollar could see itself around the 80 something. Yeah, the index could come to that level. So we are hoping that the Federal Reserve keep a rate steady. We do not want any further rate cuts for United States dollar. We do not want any further rate cuts. From my own perspective, it's not something I want for United States. And but as long as data continue to come in, we would like to see if inflation is within 2% target, which was the Fed mandate given to them by the ruling class. The rule is for Fed to return inflation within 2% target. And if Fed achieves that, that could be an opportunity to keep rates steady. And as time goes on, we begin to look at increasing interest rates as higher interest rate encourages capital inflow. So we want to see more money flowing into the United States. That's what we want to see. So for now, we have a structure showing the dollar resilience rebound, and most likely this could be the trajectory. And we have another structure in this area where I want to see price on another bounce off. If price bounce at that level, according to the line chart, we have here a stronger demand structure and a probable series of demand structure before breakout structure and a possible retest. And price broke out from the W structure and upswing. And now we have a breakout structure, price approaching that area of supply, forming a dynamic resistance. So what I want to see is a possible retest into this structure as the upswing continues. It becomes a litmus test for buy continuation and a test of resilience, economic resilience. So as you continue to see the index spring up, it shows a state of the United States economy. But at the moment, the market faces an immediate supply. There is an immediate daily, weekly supply at this level. So we'll see how the weekly candle closes. If the weekly candle closes, of course, the candle closes today and we are still below the structure. We want to see how next week opens. So as next week opens, we see if price at any time will try to break this structure. A break above the structure will show strong resilience in the state of the economy. So if we manage to break up from here, then price will retest and we move on to retest the next supply roof. At this level, the dollar index and the state of the United States economy will be tested to show the level of strength and trust and from coming from investors. So at this level, a break above this level will open a wave of buy where you see the sentiment will change from bearish to bullish. So price need to clear this area so that we can ride to the moon. Yes, so if we manage to clear this zone, the most likely, then the next area where we see ourselves, let's see, we'll clone the structure and see where it takes us and see if it comes out as clean as expected. Not as clean as expected, not as clean as expected. So we still need one or two adjustments. Not as clean as expected. This is the right thing. This is what we have. The beauty of market structure is that the market structure has to be clean. Believe it or not, if the structure is not clean, then everything is wrong with it. And a structure that is not clean on technical won't give an accurate price action. So we have here price create here, supply roof, create here, so supply roof, create here, so supply roof, and we want to see price return here. So we'll be watching to see if Federal Reserve will hold on into interest rates, and if we hold on steady at 4.5, that could technically help the United States dollar recover. But at the moment, we do not want any rate cut. Any further rate cut is going to push the dollar away from the support zone and technically send price tanking. You could see the dollar index coming this way. So I'm going to mark it. Here becomes my next demand floor. So we don't want any further rate cuts. We don't want it.